Hi guys, so it's the 26th of November and the budget fairy has been, so let's see what our good little boys and girls are getting in their April change of new tax year next year. Obviously, one of the big things that are affecting nurseries are the increase in national living wage. So for your apprentices, we're going from £7.55 here to £8, 18 to 20, 10 to 10.85, and then 21s plus, it's 12.21 to 12.71. This is obviously one of the biggest ones that impacts nurseries. It does mean that if you have an 18-year-old working 40 hours a week all year round, it's going to cost £2,065 more per year to employ them. Now, we're not going to see such an offset in funding increase this year to cover that. So some of that is going to have to be covered by increases to parents' fees. And as with every year, we're just going to have to find a way to make it work. You've also got things like the personal tax threshold, so that's frozen until 2031 now, which means that for those apprentices who are now going to be earning more money, the chances are they're going to be paying more tax as well. So not very good for them at all. If it is that you're a limited company and you're withdrawing dividends from your limited company, then at the moment there's no change to the initial £500 allowance you get, but your basic and higher rates of dividends tax are going to be increasing by 2%. This means that in real terms, if it is that you're withdrawing 130k in dividends per annum, as of April next year, you're going to be paying an extra £2,362 tax on that. So that's something to be looking out for. We're also in a situation where things like unspent pension pots are now being brought into inheritance tax, which does mean that if you've got things like a property in a SIP, and when you pass away, that would now become part of your estate. What that means for a lot of people is we're all going to have to start getting a bit more creative again, because obviously we were able to avoid that. We can't any longer. From April next year, that will be coming into play. We also are going to be paying an extra 2% tax on properties and savings income. Now, this is probably going to affect buyers more than sellers. We have a lot of investors at the moment who are kind of funding nursery purchases on property portfolios. And obviously any income from there now is going to be taxed a little bit higher. One big announcement that was made, and is particularly relevant to nurseries because it's very much a buzzword at the moment, is about employee ownership trusts. So this is where essentially you sell your goodwill to your employees in the manner of John Lewis or such like. Now, previously, you were getting 100% tax relief on a capital gains tax for that as the person who was selling. This is now going to be dropped to 50%. We're assuming this is going to be from April, and I know a number of people who are actually going through doing this with their settings at the moment, though there has been no date confirmed. So do check that with your accountant, especially if it's something you're going through at this moment in time, because the benefits to you as the seller are going to be reducing. We are, however, still having full expensing on things like capital allowances. So that was obviously made permanent last year. It is set to continue. This does mean that as a company, you're able to deduct the cost of refurbs and investment, which is obviously great news going forward for those of you who are growing your chains or buying new settings coming into your businesses and are looking to overhaul them a little bit. One change that's going to take place from 2029 is pension salary sacrifices. So this means that if you are a limited company and you are employed by your own limited company and are making a salary sacrifice over £2,000 per year, then actually go from that point, you will then be paying both employers' NI and employees' NI on it. Sorry, they're going to get you coming and going. That's from 2029, so not overnight, but worth starting to think about now. Final thing you'll see is fuel duty. This is going to increase from 5p from September next year. Now, for those of you who are running mini buses, after school clubs and such like, that's where it's going to have an impact for you. As we suspected, electric car duty is going to be 3p a mile, but they're not looking to do anything with that until April 28. So we've got a bit of time yet where they work out how they're actually going to calculate it and claim that. But that's probably going to be something that's affecting, as I say, for those of you who run minibuses and such like, or your own cars through the companies, that's something that's going to be impacting you as well. Hope you guys found that useful. If you have any questions, please do drop me a line below, and hopefully we'll speak soon.